What's good, YouTube? Welcome back to the channel. It's your boy Keno Brown, and it's another great day to be great. In this video, I got something special for you, something that you always ask for every week. Every week, not a week goes by you don't ask for this. Guess what it is? Another backtesting session. Come on, let's go. No, as usual, I gotta give you game, and I do a lot of game giving in the backtesting session. So let's get right into it. So let's get it started. I'm going to backtest from the 21st to the 24th. On the 20th, it was MLK Day, so the markets was open. There was just nothing for me to trade, so I'm not even going to review that day because it doesn't make sense. So first things first, we start on the 1 hour charts. What do I try to identify from the 1 hour charts? I try to identify structure. What is structure? Higher highs. In an uptrend, we have structure that looks like this. Higher highs, higher lows. In a downtrend, we have structure that looks like this. Lower highs and lower lows. Make that a different color. So as you can see, in an uptrend, we have a high. Maybe I should write it out. I never wrote it out before, but maybe I'll just write it out. A higher high and a higher low. So we have higher highs and higher lows in an uptrend. In a downtrend, we have lower highs and lower lows. So this is what an uptrend and a downtrend consists of higher highs in an uptrend. You see high, we created a high right here. We created a new lower high, a higher low. Then we created a higher high. Then we created a higher low. Then we created a higher high. In the downtrend, we created a low, lower high, lower low, lower high, lower low. So that's what I try to identify on the 1 hour time frame. I try to identify structure, right? So let's just draw a structure out real quick. So as you can see, structure. Let me identify structure with you guys. Obviously, it's a little nippy in here. Okay, so I try to identify structure on the higher time frame, on the 1 hour time frame, right? So let's not go too far. All right, we'll start from down here. We got the low, we got the high, we got the low, we got the high, we got the low, high, and then price created a low right here, right? Right here, I would say this is definitely a tricky day to trade, or a tricky day to identify structure. Why would I say it's a tricky day to identify structure? Because we created this low right here, right? Then we created a new high. But then the markets came and created a new low that's lower than this low. So it's a little tricky because this low does not count anymore. But does this low count? No, I wouldn't say this low counts either. So really, we only have this high. I don't know if I can count this low. I would have to go to the lower time frame, like a 15-minute time frame, to see structure even deeper. But I'm going to draw out these areas of interest on the 1 hour time frame, as I usually do. I make them purple. I like to make my areas of interest purple on the 1 hour time frame, right? And as I said, this area is tough, right? This is a tough area. I mean, I could still draw the structure, the area of interest right here, but look how far price went down here. So really, all I have down here is the structure high from down here. But what do you notice when you see I drew that area of interest? What do you notice? I'm gonna tell you what I noticed. I noticed that price created a high up here, right? Then when it pushed, it created a new high, it came back, it didn't retest this area. It pushed up, it created a new high, and then it came back and retested this area where the same high is to the left. So this is still an area of interest based on the previous high that was before this high. So I would count this area of interest as a strong area of interest to trade from when price does get back there. So I don't see anything else as far as the 1 hour time frame. I'm gonna just drop down to the 15-minute time frame. 15-minute time frame, I also didn't see much. I'm not gonna lie, I didn't see much. I could see structure though. Let's just draw out structure. We got structure. We have these lows right here. Boom. We created a high. We created a low. We created a high. We created a low. This is not a new high, so it's just high, low, high, low. But does this low even count? Because this didn't create a new high above this high. So does this low even count? No, not really. I only count structure highs after they create a new high or low. So if price goes up and create a new high, but it didn't went down and created a low, but it didn't create a new higher high, that low doesn't really count to me until it creates a structure. Just structure again created. So for example, price pushed up here, right? And it created a low. Then it created a new high. So I can count this low because this is actually a low. This is the low that was created before the new high. Now price pushed down again, but did it create a high above this high? No, it didn't go above this high. So I can't count this as a new low because price can come back down here, right? It could do this. It could do this, drop down here, or it could potentially from here go ahead and create a high. Then I can count this low, but I don't know. It's not clear yet. Price hasn't shown me where it wants to go. Well, it shows me where it wants to go, but it hasn't shown me that that's what it's done as of yet. So on the 15-minute time frame, I like to draw my areas of interest again. And I'm gonna draw this high right here. And this I would say this is about it. This is all the structure I've seen on the higher time frames before it's time for me to drop down to the 15. I'm just gonna fast forward a little bit till 9:30 and then drop down to the 1 minute time frame. So this is 9:29. The very next candle is the 9:30 candle. So boom, this is when we're looking to start trading. I only start trading after 9:30. So boom, you can see the 9:30 candle. We pushed up. We hit that area of interest where we could see these highs to the left, where price started rejecting and created it dropped down. It didn't really create a low because it didn't break the low of this low, but I could see rejection from the highs. So I already like that area as an area of interest, but we'll see. Yeah, that wasn't it either. So price went back up again. I'd only consider if it came back down, but I could see from that 9:30 candle it wasn't solid. That wasn't a solid candle. It's still wicking around. Ooh, that would have been my entry right here. I'm not gonna lie to you. So how do I like to get into a trade? I like to get into a trade after price closes below the highest candle, the last bullish candle in that structure. So this is the last bullish candle. Although all of the candles are black, you probably can't tell the difference. This is a bullish candle. I can tell the difference because I always look at the same thing. So this is actually a bullish candle. So this is the last candle that closed below. So this was a bearish engulfing candle. So I would enter on the retest of this bearish engulfing candle, which is we see right now. Retest of the bearish engulfing candle, try to take it back down. Let me mark up my charts right now. Stop loss up here, entry right here. When price gets here, you can see it already hit TP12. I like to see when price moves fast, like that bullish engulfing, boom, it closes, it's big, pause, and then it pulls back. And it enters me into the trade. It just gives me confidence to know that trade is gonna move fast. Ooh, that stop loss hit in a very quick time. Did I take this trade? I'm not sure if I took this trade. I do have my journal though. So January 21st. Let's see, what trade did I take? What was the first trade idea that I took on January 21st? TP1 hit. Let's see the wider version. It looks like the same. TP1 hit. I think when I got into this trade, you could see I got hit, boom, TP1 hit, but then it stopped me out. But I'm not sure if this is the same trade idea, honestly. I didn't map this out good enough for me to actually see. I got in at 44.019. Let's see if it's the same thing. 44.019. Nope, it was 44.019 is all the way up here. So this might have not been a trade idea that I caught. So we're gonna get rid of that. Wait for price to go up once more. Boom. Ooh, you can see that push above. Okay, price closing. What am I looking for? I'm looking for price to the last bullish engulfing candle. So I'm looking for price to close up below this candle. Once price gets below this candle, closes, boom, bearish engulfing, taking it back down once it retests that area. Let's see. Yes, I like that candle right there. This looks like the trade idea. This looks like the trade idea I took. Yeah, yep. What price did I catch it at? 419. Yeah, this looks about it. This looks like the trade idea. Yep, 419 is right there. Trade idea right here. Let's see if we get pulled back, tapped in. I think I did get pulled back, tapped in already. Yeah, it already pulled back and tapped me in. So my trade idea, my entry was right here at 419. It pulled back, tapped me in. Boom, TP2 in like no time. So this was the exact trade idea. TP2 happened. As I said, I journal all of my trade ideas. So sometimes in the backtesting session, I might make a mistake, or I'll notice a mistake that I made during the live markets in the backtesting session. One of the two. But yeah, this is the trade idea I took. And it hit TP2 in, I got tapped in at 950, TP2 hit 953. So 3 minutes TP3. I remember this trade because I made a video on this trade idea as well. So let's go back to the 1 hour time frame. And let's fast forward the clips. 1, 2, 3, 4, 5. Why do I have chart markings still? I still do have chart markups. I thought I got rid of them, honestly. Thought I got rid of these. You can see price is bulling right now. Price is bulling. So when price gets like this and there's nothing really left to the left that we can see, we have to scroll all the way left. But when we get to all-time highs, it's not going to be an all the way left to scroll to, because we're at the all-time highest price. I hate trading all-time high price because I like using past information, past data, which is these old prices that we could see on the charts, to make predictions on where a price could go next, where I could draw my areas of interest. But when price is at its all-time highs, I got nothing. I'm screwed. So let's draw these areas of interest. As I said, there was nothing that we could see in that day or that week to draw an area of interest from. So I have to go all the way left to draw my areas of interest. I got two. Do I have another area of interest? Do that one. Okay, let's go back to the 1 minute charts. No, I should go back to the 1 hour charts. 1 hour charts and draw these areas up. So it would look like something like this. We'll make it purple for the 1 hour charts. Something like this. Purple for the 1 hour charts, and it was like this. The area of interest right here was so small. Do I see a high? I see highs right here. I can see like highs right here, but I don't really see a low because it's not clear. Even this is kind of tricky to trade, but we'll see what price gives us anyway. Let's drop down to the 15-minute time frame and let's see if we see any areas of interest that we can mark off. I wouldn't mark this area of interest off because it's already marked off based on the 1 hour time frame. I wouldn't mark this off either because we could see it's already marked off on the 1 hour time frame. I would say there's nothing really to mark off if I'm being honest. Maybe right here for the wicks, and I didn't cover why I just mark off the wicks, but I can go back and cover it right now. Let's put this in 15-minute area, 15-minute area of interest, which is going to be orange. So let's go back to the 1 hour time frame. Let me clarify, why do I only mark off the wicks of the highest point? I only mark off the wicks of the highest point, right? Because let's think about a candle like this. A candle that looks like this, right? From top to bottom, let's say a candle just looks like this. No wicks, no candles, no wicks at the top or bottom. And this is a bullish candle. Let's call this a bullish candle. You could see price was super strong going all the way up, right? Buyers were in control on this whole candle. No sellers was here. No sellers was able to take over this candle. But compared to a candle that looks like this, let's say it looks like this, and then we have wicks that looks like this. Imagine like a wick that looks like, let's go up higher, like this. We can see this is still a bullish candle. The difference between this and this is that buyers were fully in control on this candle. But here you can see the buyers took price all the way up here, but the sellers were in this area. They were here. The sellers brought price all the way back down and it closed right here. So you can see that the buyers were not in control of this whole candle. The sellers took over in a particular area in the candle. They took over at the top of this and they brought it all the way down. So let's see what that looks like on the charts. On the charts, we can see I only use the highest candles wick on the structure. So we can see something like this. Something like this. Price got up here. This was the highest wick up here, right? We had the highest candle wick up here before price created a new low. Then price came up again, right? Then once price came up again, what happened? Well, this is not the area, but this, no, let me go over here. This is the area. This is the highest point that price went up in this area of interest right here. This is the highest point. Price created this low down here. This is the lowest point. Created a low, came up, created a high, came down, created a low. But what happened when it came down here? It was met with the buyer's force that was down here. The buyers were down here. When price came down here, the buyers took it back up here. So when the price came back down here again, who was here? The buyers are here again. The buyers are at the same price that it took it before. So price came back up again. Who was here? Look to the left. Sellers were here. I'm going to take off some of this. I don't want to confuse y'all. The sellers were here. How do we know the sellers are here? Because the last time the sellers came here, they dropped price. They dropped price down here. So now when the buyers came back in this area, the sellers took it back down to where the buyers were located. And then the buyers took it up again, right? The buyers took price all the way up through structure. Let me take off. I don't like having messy charts, you feel me? Price took it all the way back up here where you could see these areas of interest was created. Then the sellers stepped in up here where the highest candles wick was here, right? This is where the sellers stepped in. How do we know the sellers stepped in? Because they took it back down to where the buyers were located. How do we know the buyers were located? We look left. You remember? We look left. This is the last place the sellers were located before the buyers took over. We know the buyers took over because price just pushed right through this area of interest. It stopped rejecting it. It stopped turning around at this area of interest. Well, that means that the buyers stepped in. There's a whole lot of buyers now. The buyers' momentum started picking up, and they pushed price all the way up. Up here, though, this is where the sellers came back in, and they were like, nope, we're going to push price back down to where the buyers started taking over. And at the same time, same area that the buyers took over, they came back and they're still there. How do we know that they're still there? Because price pushed up and created a new high. When price came back down here, oh, that's the wrong two. When price came back down here, exactly where the buyers took over, we see where the buyers took over right here. Price came back here, it started bulling, it created a new high. So now we know that the wicks is where we can determine where the fight happens between the buyers and the sellers, because usually that's where, well, at the highest point, like the highest structure point or lower structure point, that's where buyers and sellers have fight, you know, and that's where we could see who's winning the fight or who won the fight, because we could see a new high created or a new low created based on that wick, that last wick that we see at the highest or the lowest point before it creates a new structure high or structure low. We know that's where the buyers or the sellers are now located. That's where they won the fight the last time. So when price gets back there, I'm expecting them to win the fight there again. Now let's go back to where we's at. I did sidetrack just a little bit just so I can explain it to you. Let's go back to the 1 minute time frame. Let's fast forward the clips to 9:30. 1, 2. Go back to the 1 minute time frame. Now we know that the buyers were here. The buyers won down here. Why? Because you could see that big push that killed this high to the left. You could see that. Boom. Push, 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 push. So when price comes back down here, I can expect that price is going to buy from down here. I can have a bias, but it's not determined yet. It could sell, it could buy, whatever. Ooh, look at that. Look how price came down here and started whipping the buyer's butt right here. The seller started whipping. You can see a boom, big bearish candle, boom, bearish candle, boom. Right here though, we can expect that we could see that price is starting to reject a little bit, because we could see this bullish engulfing candle. But for me personally, this is where I would probably get into a trade. I could possibly get into a trade here as well. And I think I did put this in my journal. I did put this in my journal. That a better trade idea would have been here, to get in down here when we seen this big bullish engulfing candle, wait for the retest. I remember this trade too. Wait for the retest, boom, take it above. But I took a safe entry where I think it was more conservative, where I could see like the buyers is actually taking over, and I took trade up here. I waited for price to close above here. So you're going to see next candle, boom. That wasn't it. Come on. Okay, price came back down again. So I wouldn't have gotten to this trade. But now that we touched the next area of interest, where would I get in? I'll probably get in right here. I'll probably get in right here at the close of this last bearish engulfing candle to the previous to the area of interest. So yep, I would have got in right here. Let's see if TP1 would have got hit. TP1 would have got smashed. TP2 would have got smashed. Let me see. Is this the trade I took on the 22nd? Let's review. This is why it's important to journal, because now I get to review it and see, is this the exact trade that I took in the live markets that I took in the backtesting session? So yes, see that first trade I took right here, I did take this trade and I got stopped out. I did take this trade. I got stopped out. I could see first trade hit break even with the quickness. Okay, I got break even. That's good. I didn't get stopped out. And then the second trade hit TP2. So the second trade is this exact trade that I show you right here. TP2, you can see, is the exact same thing. I got in here. This was at the break of this candle's high right here. You can see it. This is the candle it retested. Once we got the close above, we got the retest in this candle right here. I got in on this candle right here, rode this John to TP2 with the swiftness. Let's see how long it took. I got in at 9:51. It took till 10:06 to get to TP2. So that's about 15 minutes. I would say 14 minutes. It probably was a 13-minute trade, but let's say 14 minutes. So it took 14 minutes to hit TP2. Not a bad day. So the Tuesday I took a dub. Wednesday I took a dub. Let's see what Thursday looks like. Let's go back to the 1 hour time frame. We're gonna do the same thing that we've been doing the whole entire time. Do I want to get rid of the charts? No, I don't want to get, because I know there's nothing to the left that I can mark up. So I'm just gonna leave all of the chart markings right now. It looks a little messy. I don't like having my charts messy, but I think I'm going to be able to use what's on the charts right now. Especially these areas of interest that's coming from all the way from the left. These areas of interest I can definitely use. So we had this low that was created. Let's get rid of this. Let's get rid of that. I can count these right here. So this is the low that was created on the 1 hour time frame. Let's make it purple. Funny thing, I want you to notice. You see how it created a high? When price disrupted the high, you could see when it came up here, the buyers started taking over. When sellers wanted to push price back down, who was down here? The buyers. And then price went back up again. Same example I was trying to show you before, but it does it every day. It's an everyday cycle. This thing does it every single day. It's just about understanding the market cycles and understanding how to pick up on structure. Structure is the core fundamentals of how I trade. The core basic fundamentals. Everything revolves around structure for me. So you can see market came up here, created a new high, came down here, created a low, then came up here, created a new high again. But the new high is still next to the old high. So I'm going to still keep price here because it's so close. It's like it could still reject from this area. It didn't bullish engulfing out of that area of interest. So I still can count it. So let's drop down to the 15-minute time frame. Let's see if we see anything on the 15-minute. Nope. I don't see anything on the 15-minute time frame to mark up. Let's just go straight to the 1 minute. On the 1 minute charts, let's skip to 9:30 real quick. 1, 2. Let's get that 9:30 candle popping. It's the 9:30 candle right there. Boom. Price shot up into that area of interest again, but it's been rejecting. What would I be looking for? I could look for sells from here. Easily could look for sells from here. I'll probably take it at the low, the break of this low. And then once we get a close of a candle down here, boom, take it down. That's an easy trade. Let's see if that's what happened. I don't think I remember this day. I don't remember what happened on this day, but price went up again. It created a new high. Okay, so that area of interest is screwed. We have another area of interest here that's all the way to the left. If you guys remember, let's go to the 1 hour charts. It's all the way to the left right here. You can see I'm going to draw the other line to capture the whole spot. But this is the top of the wick. Let's drop down to the 1 minute again. So price is back into that next area of interest from all the way to the left. As I said, there's no price that we can judge from in the day. To mark this area up, we had to go all the way to the left to like October, November to get this price. So what would I look for? We hit that next area of interest. We got that candle. I'll look for a close up below the area of interest, below that last bullish candle. And then I'll be taking the trade. Let's see if that's what happened. No, price is bulling. Ooh. Because my entry would have been up here. This would have been the last candle's close right here. It's So let me draw this up. I would have took this trade, stop loss here, entry here. But you can see how that trade left me, boy. But it would have retested, got me in, stop loss hit in like a millisecond. Let's see, did I take this trade on the 23rd? Stop loss hit so fast. Stop loss hit with small points, lost $61. Was this a trade idea? No, this wasn't a trade idea. So that wasn't the exact trade that I took. Let's see. We got in right here. We got in at 44,456. Let's see if that's a price. 44,456. So price is a little higher that I got in. 456 was about here. So this is where I got in. So this exact trade wasn't in. This wasn't the trade I took. Although it looks like a clean one that I could have probably taken. 456 is up here. Let's see if price bulls a little bit. Ooh. Okay. Yeah. This more looks like the trade idea. So I probably took price here when price came and closed below 456. Yep, I took that on the entry. Did I get TP1? I did not. I did not get TP1. I did not get TP1. Did I get TP1? I did get TP1. I remember it. It took forever. Oh my god, I was in this trade for so long. I was in this trade from 950 all the way to 1029. From 950 to 1029. Do you know how long that is, bro? I was in this trade for dumb long, bro. Just to get TP1, and then I moved my stops to about break even right here. Came back up. Look at this. Next two, three candles stop me out. Look how fast it stopped me out. Look at that. Tragic. So I think I took a break even. I took a break even on this day. 2 W's, 1 break even. So 2 W's for Tuesday, Wednesday, 1 break even for today. For Thursday. Let's do Friday. Friday was obviously, I remember Friday. Friday was an annoying day as well, but I was not patient. I'm gonna get rid of all this drawing because now it looks crazy. Now it looks crazy. You feel me? I really just don't like my charts looking nasty. I rather it look clean as possible so you guys don't get confused. I know what's on the charts, but you might not know. So we created a high right here on the 1 hour time frame. Boom. This is the highest point. I will call this the low right here. This was a previous high before that one. And this was a low. So this is the 24th. Let's see if I see anything else. 15-minute time frame. Do I see anything else? I see structure. See structure on the 15-minute time frame. I'm gonna draw it out real quick. Boom. High, low, high, low. So I would probably, what the heck? I'll draw a structure here. Gosh. I'll draw a structure right there. Let's make that a 15-minute candle. Boom, structure right there. 15-minute area of interest. You can see that this 15-minute area of interest, they line up. So if I drag this across, oh man, drag that across, you can see how the low and the previous high is connected. Do you see how structure works? Do you see how it works? Like it created this. Let me get this. This is where the buyers took over, right? They pushed price back up. Sellers stepped in. Buyers said, boom, we don't care about that no more. So when the buyers stepped in again, this is where the sellers were located. I mean, the sellers took price down here, said, we don't care about that no more. We don't care about that floor that you created, that point of support. Nope, that don't matter to us. We taking it back down. So the buyers try to step back in up here, and then guess who was here again? The sellers, because the sellers took over the area from to the left. So the sellers took price back down again, right? It's just simple structure, bro. Structure is everything. Structure is key to understanding the markets, because that's the only thing that stays consistent, which is structure, right? Everything. I don't use indicators, oscillators, price action, straight price action only. Structure is majority of what I'm looking at. Everything else, every concept that's around structure, around like price action, I can understand, I can learn. But structure it comes down to the basic, the key fundamentals of trading right there. I would draw this area of interest right here too, where we created a low. We could see price started rejecting off of it. Boom. I'll create that too. So let's drop down to the 50. Oh, we already on the 15 minutes. Skip to 9:30 a little bit. As you can see, when price came up here, right? Who was up here? Who was here again? Sellers. So the sellers took price down again. But the buyer said, nope, we're going to try it again. So at this area, I'm going to be looking for sells again if it's possible. Either I'm going to take sells here, I'm going to take sells here, or I'm going to take sells here. I can also take buys too if price does something like this. Say price bulls past this area. Then it comes back down to it, I'm going to take buys, right? And I'll probably be looking for sells up here. But if price goes like this again and it comes back down to this area, I'm looking for buys here. So it just depends on how structure lines up, how structure correlates with these areas of interest on the 1 minute time frame. Now I'm looking for my entries. The 1 minute time frame, I'm looking for how it correlates with these areas of interest that I drew on the higher time frame, 15 minute, 1 hour time frames. So this is the 9:29 candle. Let's see the 9:30 candle. Boom. You see that? Big bullish candle. I'll still be looking for sells up here, but I'm not looking for sells down here no more. I'm looking for buys if it comes back down here. But why? Because we had a big bullish engulfing candle, snapping, going crazy. I'm not going to fight that momentum. It doesn't make sense. Boom. That's the candle. What's the next candle look like? Come on. Take it too long. Ooh, you see this candle right here? You see this candle right here? How it just wicked? Like, just pay attention to this area. You remember I told you I'll be looking for sells from here. Why? You can see all of these candles wick. You can see all of these wicks. What does that show you? It shows you seller buyer weakness, seller strength, because the buyers are trying to push it above this area, but they don't have no strength to push it above. So price keeps going back down. It keeps failing. You can see, boom, boom, we had a wick. Price try to go higher. Boom. Off of this big bullish engulfing candle too. Price try to go higher again. Nope. The sellers are here. They brought it back down. Price tried it again. Boop. Nope. The sellers are here. Price brought it back down. Price tried to get it again. Boop. Nope. The sellers are here. Price brought it back down. So I know this area is a solid area to take sells from, because it tried it just 3 times in like from 9:31 to like 9:45. So about 14 minutes struggling to break that area. Struggling. Right? So my entry, I seen this trade idea. I remember this too, because it left me, bro. This thing left me. It didn't retest. So price came back down here. I was looking for the close, which is what it did on the very next candle. I just wanted to tap me in right here. Right here. Just tap me in and go. Just go. Like this. I'm going to draw it up for y'all. Price just left me, bro. I was so tight. I'm not going to lie to you. This was a clean trade. And it happened so fast. Oh, it happens. It's tragic. It does happen. Like this. Boom. Price just started leaving me. All I wanted was to turn around. Just turn around. Oh my God. It could have just turned around and let your boy get in the trade. Nope. It did not retest at all. It just left me. But there was another trade idea that I seen. Now, if we go back on a 15-minute time frame, now, let me put that back. I meant to get rid of this. What happened? Price came and created a new low below this low, right? So now I'm going to draw this as an area of interest. Right here. This is now an area of interest again. We're back. The play is back. There's a play now. So now, as I'm contemplating taking a buy again, we can see structure. And let me show you on the 15-minute time frame. You can see structure is starting to reject these lows from here. Even though it broke below it, it couldn't stay below it. It started rejecting. So hold on. Who's down here? Buyers are down here. Why? Because we know it pushed price back up here. But the buyer is stepping in again, starting to reject. Remember? It's all structure, bro. I promise you. If you could pay attention, if you could understand structure, it's so simple. So what I was waiting for was price to break above the high of this candle, retest, just like I always do. Wait for the break above, retest, take it up. Now this is the part that got me, bro. I was not patient. So, well, we're gonna walk through it. So boom, we got the close. We got the touch. I got in at 10:07. Price started bulling. Boom, bulling, going crazy. Look how close my TP2 was. Look how close. Look, my price is already at break even for me. Price is already right here at break even. But I'm ready to be out of this trade. Look how close TP2 was. Let me this is the price range indicate. 1 point. Could have just went up one more point and your boy would have been up for the day. This John turned around with 1 point left. Oh my God, with 1 point left. Now look what she did. From 10, what price I got in? 10:07. It just kept ranging. It just kept going up, down, up, down, up, down, up, down until 11. I think it was 11:11 or 11:12 because I came back around the charts at that time just to see what it was doing. It never stopped me out, but I left this trade early because I was tired of being around the charts. So it took until I think it was 11:11. Yeah, 1, 2, 3, 4. Yeah, it was 11:11. 11:09. Is that 11:09? All right, it took till 11:09. From 10:07 to 11:09. 1 hour and 2 minutes. It hurts, bro. I really don't like being in a trade for that long. I mean, I can be. I just didn't have the patience, bro. I just didn't have the patience, big dog. Really just didn't have the patience. Let me show you. This is the exact trade I took. Look, I took profits here on this candle. I think I walked away with $90. Took profits here. Price just kept up and down, up and down, up and down, up and I was in this trade for at least 30 minutes before I decided to take profits. Yeah, it's tough like that. Sometimes it happens. Sometimes I say 10 minutes or less or 15 minutes or less. Yeah. Sometimes price can take longer than 15 minutes to hit TP2. It's just what it is. I got TP1. I should have been content. I should have just walked away and just left it. If it hit break even, it hit break even. I could say shoulda, coulda, woulda, but honestly, I feel like I followed all of my rules. I like to be in a trade no longer than 15 minutes. I was in this trade at least 30. I just walked away with what I had. It is what it is. Even though it did turn around to hit TP2 another 30 minutes later, which is annoying. It is what it is. So this day was a dub too. So Tuesday, Wednesday, dubs. Thursday was a break-even day. Friday was also like a break, kind of like a break even, because I was up like right before it almost hit TP2. I was up like 350, bro. If it hit just one more point, I would have been up 390, 400 for the day. It's tough though. It's tough. It really is tough. But this is what trading is. It plays on your emotions, bro. It plays with your emotions, plays with your psychology. It's all human emotions. So if I didn't get emotional in that moment, I could probably have held it and just still walked away with $390 for the day. But I got emotional and just walked away with $90 for the day. Left the 300, just took the 90, right? But it's a part of trading. It's a part of trading. This is why I'm doing this backtesting session, so I can learn. You can learn. We can review my journal. You can see that every trade that I took was the same exact trade I take in the backtesting session. Well, not exactly, but for the most part. But it resulted in a green week for me. I still made a lot of money this week. Still took a payout. I mean, not a payout. Yeah, withdrawal. Payouts is prop firm. Withdrawals is like your personal account. It is what it is. You know, life goes on. We keep going. We still keep going forward. It is what it is. But that's my video, y'all. Till next time. Peace.